Well, hello and welcome back to another Trade for a Living Trader's Tip. We're getting into Trader's Tip number 6, how to draw support and resistance. So let's get going here. As we think about technical analysis, in the world of technical analysis, there's two words that are more important than anything else, and they are support and resistance. What are these mythical words that you hear so much about? Well, let me help you understand it. Support is the price point where a stock finds more buying pressure than selling pressure, and the buying pressure drives the price of the stock higher. That's going to create a support scenario. So in other words, support's going to be at the bottom, and you're going to start to see buying pressure coming in there. Now, resistance is the exact opposite. Resistance is the price point where there's more selling pressure than buying pressure, and the selling pressure drives the price of the stock lower. In other words, resistance is going to be at the top, and you're going to find your stock running up into resistance. Let's take a look at a chart over here. Look at this trade on Caterpillar, and notice I'm going to draw a line in here, and every time we get up to this price point, just slightly above $88, it's almost like a miracle. It's like you just run into a wall, there's a bunch of selling pressure, and the stock price starts to go lower. Now watch this, I'm going to draw another line in here, and watch what happens. It seems like, for whatever reason, every time we get down to about $82 a share, for whatever reason, the price of the stock starts to go higher again. Why would these things happen? Well, this is the mystery of support and resistance. So it doesn't really matter why it happens. I mean, it happens because of human behavior, because of the way different people who are trading those stocks look at them. But the key is that you learn how to identify it. So let me help you identify them here. We've got a few rules for drawing our lines of support and resistance. And then I'm going to show you how to actually go into a chart that you've never looked at before and start drawing your support and resistance lines. So here's the first rule. The first rule is we're going to always start with a line chart. Remember, there's several different types of charts. You can have a line chart that looks something like this. You can have your bar chart that'll have little bars like that. And then, of course, you can have your candlestick chart, which will have your candlesticks. We're going to always start with the line chart over here. And the reason for that is it makes it really easy to see the turning points and to draw your lines. And then once we've done that, once we've kind of gone in there and drawn all our basic lines, then we're going to flip over and use either candlesticks or bars for additional confirmation. The extreme high and extreme lows, they'll help for additional confirmation. But it's always good to start framing your chart with just the basic lines themselves, the basic line chart, and then come behind it with the extreme intraday highs and lows. Now, the next point you need to know in terms of drawing lines is we're looking for at least 2 points. 2 points makes a line. 3 points starts to establish a trend. So we're looking for at least 2 points that we can connect. 3 points or more establishes a trend. And then here's your final bullet point here. The more times that a stock price hits that price, or a stock hits that particular price, the more important that price point is going to be. Okay, so these are your basic rules. Always start with a line chart. Use candlesticks for confirmation. 2 points makes a line, 3 or more points starts to establish a trend, and the more times a stock hits a price, the more important that price point. Now, let's start to actually do this. How do we start drawing? Well, here's the first step. If you want to go draw lines on a chart you've never looked at before, start with the extreme highs and lows. Take the all-time high and take the all-time low, at least within a favorable range there, and draw a line. Even if it's only got one turning point on it, that's fine. Just go draw that line in there. And what it does is it starts to frame your chart a little bit. Now, the next thing you want to do is go draw all of your major turning points. What are your major turning points? Well, anywhere the stock made a big run up and then made a turn and went down, or made a big run down and then made a turn and went up, all of those are going to be your major turning points. You got to get the major ones in there. And then finally, you want to come behind it and put a line where at least 2 turning points connect. 3 or more is better. And then once you've started to establish that, you can come behind it and start looking for candlesticks for additional confirmation, just to kind of see if there's some additional intraday highs or lows that help confirm that line. And then here's the most interesting one of all. Look back and see how well that stock conforms, historically speaking. Most of the time, if you've got a chart that's well-disciplined, a stock that's well-disciplined, I should say, you're going to be able to draw on, say, for example, the last 3 or 4 years worth of data, and then you can go back in time and it will still look the same. And if you can do that, then you know moving forward that chart is probably going to work really well. So what I want to do here is I want to actually get over into our charting software and chart a stock from scratch, a stock that we've not got charted here. And the one that I've pulled up for us to work on is Hess. If you're not familiar with Hess, it's ticker symbol HES. So you can do this in your charting software. And I've put a good bit of time on the chart here. You can see we've got time from 2012 moving forward into 2015. So we've got a good 3 years of data on here. That's usually enough to get started. And the first thing that we want to do, as I've already mentioned, is we want to draw the extreme highs and the extreme lows. Okay, so take a look here. You see this extreme high point? That's the most highest point that you can see on the chart here. So what I'm going to do is I'm going to put a line in here right across the top. That's right at $100 a share. Now, it so happens that we touched that one several times, but sometimes you'll see these and it's only touched it once. That's fine. You just need to get the highest high. And then we're going to come down here. We're going to get the lowest low that you see for this chart. And that's going to come back here about 2012, right down here, just below $40 a share. So let's snap a line in there. Now, this is one of those. You notice there's only one turning point right there. But that's okay. The fact there's only one does not negate the fact that this is the lowest low that you see on the chart. So we want the extreme highs and the extreme lows. Now, the next thing we want to do is we want to draw any major turning points. And I like to start at the bottom and work my way up. If you want to start at the top and work your way down, you can do that too. But I like to start at the bottom and work my way up. So let me just grab the big ones, the one that are just really, really obvious. There's a pretty obvious one there. Here's a pretty obvious one right here. You can see in both of these cases, there's just a lot of information that's hitting right on those turning points. And it can hit it from the top or the bottom. It does not matter. And then as we continue to move on up through here, there's a major turning point that's showing up right there. Now, how do I know that's a major one? Well, all you have to do is scan with your eyes from left to right, and you see two major turns right there, several major turns right in here, and some additional congestion right there. So those are some major turning points. As you move higher up through here, you're going to see that there's another major turn right here. Now, why is that a major turn? This one's a major one because of this point right here. You see how far down we came? We found support right there, and then we rallied out of that. So that's a major turn. And then, of course, if you look to the left, you'll notice that that was a resistance area there. Now, those are the two most important points, but if you look to the right, you also notice that there's a lot of additional congestion in there, so that helps to confirm that turning point. Now, I'm going to keep going higher up here with my tool, my drawing tool, and you can see that there's some additional turns that are happening right here. Now, sometimes this is a great example where you have to make a decision. If I were to just try to make this thing work perfect, I would either hit this one here that I just circled or this one over here on the right. But the one in the middle, if I look to the left, watch this, that's the one that lines up. So you got the most turns on that particular turning point right there. And we've got the two outliers here in the kind of the middle there and the one over here on the far right. So we're going to draw the one that captures the majority of the turns that happen in that particular price range. And then I'm going to move on up from here. I'm going to capture that major turn. There's a couple major turns right there happening. And we'll snap a line in there, get one there, and we'll get one on up here at the top. Now, that captures the majority of my major turns. If I look on through this chart, I could find a couple of additional smaller areas where I've got at least two turning points. For example, this one right here, I just drew that in there. And that's not as important as the one at the very bottom. It's not as important as some of the other turns, but it will be valuable moving forward. And I'm going to snap a line right here, capturing some of this data. You notice if I look right in there, there's several turning points that happened in there. And then there's actually a pretty major turning point right there that I missed, just right here, circling those two areas. And as I look on up through here, using my, I use the crosshairs tool to look left and right, and just to kind of, see the line visually before I snap it. And when you see stuff really lining up, that's where you want to snap a line. So I can snap one right in there. This is much less importance because it's an internal turning point. It still has value, but it's not as major as some of these really major spots that I've marked. And this is going to be kind of a bit of an internal turning point as well, happening here around $80 a share. Again, not quite as major there, but it is happening. And if I look over here to the left, I've got some resistance there and just a little bit of support happening in there. So it looks like we've just put a bunch of lines randomly on the chart here, but we did not. In fact, these lines have quite a bit of intelligence in here. And what I'm going to do next, I'm going to circle several areas against these lines that we've just drawn, and I want to draw your attention. We're going to confirm these lines. So the first thing we've done here, we drew the extreme highs and lows. We were working with a line chart. We drew the highs and lows. Now what we're going to do is we're going to confirm by looking at our candlesticks. And what you're going to see in some of these areas that I'm circling, not all of them, but in some of them, we're going to have some intraday highs and lows that will add additional clarification in here. And you don't necessarily need to change your lines when you do this step right here. You're just looking for some additional confirmation. So I'm going to flip over to our candlesticks now. And I've just done this. And what we're going to see now is, let me change my pen color. And let's see if we can see some additional information that's quite interesting. First of all, look right in here. I'm going to circle that in, or underline that in green, so you can see a distinction in here. Right in there, you got actually 3 touches that happened in there. Some interesting additional touches happen here where I'm drawing in green. I'm just going to draw some of these in here. You see that extremely higher high here that it's kind of hard to see on such a small screen here, but it's made a higher high intraday, and it traded right up to that turning point. So that's a nice little confirmation that we've got there. And if I look over here, I've got another one right there. I'm drawing some arrows, and I'll flip back and forth here in just a second. Let me just kind of look at some of these to get some additional clarification. If you can see up here at the top, I'm drawing some arrows. There's some, it's very small, but it's kind of visually hard to see, but it's in there. Some extreme highs and lows that are helping to confirm those lines as absolutely the right turning points. There's one right there. Look at this area right here, this line that we talked about. I'm circling it right now. That actually intraday traded right to that same turning point. So that gives us a lot of great confirmation right there. That's the kinds you're looking for. It tells us, yes, we've got the exact right turning point for this particular trade. So I'm going to leave my my annotations on there, the green and the red, and I'm going to flip back and forth between the line chart and the candles and just kind of pick a couple of those and look at them and see the changes. And I'll just kind of do this a couple times, and you can see how the intraday highs and the intraday lows help bring some clarification of those turning points. Now, what a lot of people want to know is they want to know, why is it that we wouldn't just start with the candlesticks? And their answer is because of areas like, for example, over here. Notice what's happening right here, these 2 blue arrows that I've just put on the chart. These 2 blue arrows on the candlestick chart are much lower. If you go to the line chart, you see that cleans it up quite a bit. Well, this is actually the place that you want it to be. I'm going to draw specifically the ones that you really want it on. You really want it on that turning point right there where the blue lines are. I've just drawn those in there. That's the actual turning point for the chart. But if you only looked at your candlesticks, you would be drawing that too low, and it wouldn't be lining up. So that's why you start with a line chart. The line chart really helps bring this into clarification. And then again, you can always come behind it and use your candlesticks for additional confirmation there. So that's how you start drawing lines on a chart that you've never looked at before. Now, the next step I want to do is we're going to go back in time. And, the reason for this is people always say, with technical trading in particular, they say, hey, this is great for history, but how do you know it's going to work in the future? How do you know this thing's going to work in the future? And so, students used to ask me this all the time, and I said, well, if it works in the future, do you think it should have worked in the past? Areas that we have not looked at. See, we just drew this chart from 2012 to 2015. But what happened before 2012? So one way that we can test this is we'll just take our chart and we'll drag it to the right. So that's what I'm going to do right now. And as I've dragged it to the right now, notice where 2012 is on the right, 2009 is on the left. See how much time there is? And let's come back here and let's look and notice, wow, look at that. This chart is lining up really well. A couple of those overshot a little bit there, but man, for the most part, these support and resistance areas are still completely at play in here. I think that was actually part of what we drew as the lowest low. But check this out up and through here. These turning points, right spot on. So this was, this is 2 years, 3 years historical from what we saw on the screen. Let's go back a little bit further. Let's drag this on over to the right here. And now we've got 2009 on the right side, 2006 on the left. Now, some of this information we would not have known because we couldn't see that high. But some of these other turning points, exactly the exact same spot. Now, that's powerful. That is super powerful. If you had a grid that was this accurate while you're looking at a chart, I mean, moving forward, that's going to be super powerful for you. Let's go a little bit further historically here, back to 2006. You can come all the way back to 2005, and then you start getting to stock splits and a totally different trading range. But that's a lot of history here. You can go back basically 10 years, and these lines that we've drawn still work. So, I'm not sitting here trying to anticipate based on these lines where the trade's going to be in the next 10 years. Here's the question. Could we, with relative certainty, could we say this grid, if it's worked for the last, 8 or 10 years, could we say with relative certainty that the likelihood is we can understand that if this stock goes up, it's probably trading to one of these turning points, or if it goes down, it's probably trading to one of these turning points? Would this grid work moving forward for, say, the next month or maybe the next 2 months? And the answer is going to be absolutely. I'm not trying to forecast and to anticipate, prophesy what the trade's going to be doing in the next 10 years. I'm just simply saying this grid gives us a structure that we can start building the trades on moving forward. And then as we move it forward, we can continue to update the lines. We can continue to update the grid. And if you can see the value in that, then what you're recognizing here is this is a grid. It's almost like a blueprint of where the stock should be trading. This becomes the first big chunk in putting together the puzzle of analysis here. If you can identify where the stock should be trading with your support and resistance, gives you a framework, everything else starts to fall into place following that. So that's why this is such an important lesson that we've looked at here, and that's why it's important that you learn how to draw your lines on your chart, and I hope you've enjoyed this. Now, if you want to learn some more, I've got some great information for you. You can always watch more traders tips here at TradeSmart University in the Trade for a Living series. We've got a lot more of these, and I'll have some more on support and resistance coming up as well. Or if you really want to get access to it immediately, just go on over to tradesmartu.com and sign up for an all-access membership where you can learn all about line drawing, get hundreds of hours worth of training available to you there, all immediately on demand, available for you right now for just one monthly price. So go on over to tradesmartu.com, check it out, www.tradesmartu.com, and try an all-access membership over there. Now, if you like this video, share it with your friends, pass it around, rewatch it. Of course, watch some more Trade for a Living videos. And until we meet again, until next time, happy trading to all of you.